In this video, we will talk about intraday trading strategies for quick profits, so make sure to watch the full video. In the worldwide world of financial markets, intraday trading stands out as a high-stakes venture where traders seek to capitalize on short-term market movements, aiming for swift and substantial profits within the span of a single trading day. This exhaustive exploration delves into the multifaceted landscape of intraday trading, peeling back the layers of complexity to unravel the key principles, diverse strategies, risk factors, and the delicate art of making split-second decisions in the relentless pursuit of financial gains. Understanding intraday trading. Intraday trading, often referred to as day trading, is a dynamic and fast-paced approach that involves the rapid execution of buy and sell orders within the same trading day. Unlike longer-term investment strategies that encompass holding positions over extended periods, intraday traders operate within tight timeframes, navigating the markets with the intention of exploiting short-term price fluctuations. Success in intraday trading demands not only a profound understanding of technical analysis, market indicators, and risk management, but also the ability to make informed decisions at lightning speed, often within seconds or minutes. Key principles of intraday trading. Technical analysis. At the heart of intraday trading lies technical analysis, an intricate approach to evaluating and predicting price movements based on historical data and statistical indicators. Traders delve into the minutiae of price charts, employing a wide array of technical indicators such as moving averages, relative strength index (RSI), and Bollinger Bands. By identifying patterns and trends, traders make calculated decisions regarding entry and exit points. Leverage and margin. Intraday traders often embrace the use of leverage to amplify their positions, leveraging borrowed funds to potentially magnify profits. However, the use of leverage equally heightens the risk of significant losses. To counteract this risk, effective risk management becomes paramount. This involves setting strategic stop-loss orders, defining risk-reward ratios, and maintaining a disciplined approach to curtail the impact of adverse market movements. Volatility. Market volatility is the lifeblood of intraday trading, creating opportunities for substantial price movements that can be harnessed for quick profits. However, heightened volatility also introduces increased risk. Successful intraday traders must be adept at adapting their strategies to varying market conditions, adjusting their approach during periods of both increased and decreased volatility. Intraday trading strategies. Scalping. Scalping, a hallmark of short-term strategies, involves traders aiming to capture small price movements. Executing numerous trades throughout the day, scalpers rely on the cumulative impact of minor price fluctuations to generate profits. Success in scalping hinges on quick decision-making, efficient order execution, and a discerning eye for spotting fleeting market opportunities. Momentum trading. Momentum trading entails identifying and capitalizing on assets exhibiting strong, sustained price trends. Traders ride the momentum, entering positions in the direction of the prevailing trend. Momentum indicators such as RSI and moving average convergence divergence (MACD) guide traders in spotting potential shifts in momentum, allowing for strategic entry and exit points. Range trading. Range trading comes into play in sideways markets, where price fluctuates within a defined range. Traders identify support and resistance levels and execute trades when the price approaches these boundaries. This strategy relies on predicting price reversals at key levels, making it well-suited for stable market conditions. Breakout trading. Breakout trading involves entering positions when the price breaks through a significant support or resistance level. Traders capitalize on the potential continuation of the trend, seeking quick profits as the price accelerates in the direction of the breakout. This strategy demands swift action and the ability to identify key breakout points, emphasizing the importance of timing. News-based trading. Intraday traders with a penchant for staying ahead of market-moving events may employ news-based trading strategies, reacting swiftly to economic reports, corporate announcements, or geopolitical developments. Traders capitalize on the immediate market response to breaking news. This strategy demands a comprehensive understanding of market sentiment and the ability to interpret news impact swiftly. Risk factors and challenges. Market risks. Intraday trading is inherently susceptible to sudden market movements triggered by unexpected news or events. Traders face the constant challenge of adapting swiftly to changing market conditions and implementing risk management strategies to mitigate potential losses. Unforeseen market risks demand a resilient and adaptive approach, where continuous monitoring and strategic adjustments become integral. Emotional discipline. The fast-paced nature of intraday trading can evoke emotional responses, leading to impulsive decision-making. Successful intraday traders cultivate emotional discipline, adhering to predetermined strategies and avoiding reactionary moves driven by fear or greed. Maintaining a calm and rational mindset in the face of rapid market changes is not just a challenge, but a prerequisite for sustained success. Technical issues. Intraday traders heavily rely on technology for order execution and market analysis. Technical glitches, system failures, or connectivity issues can disrupt trading activities, emphasizing the importance of robust technology and contingency plans. Technical preparedness becomes essential to navigate potential impediments swiftly, ensuring that traders can execute orders and manage positions effectively. In conclusion, intraday trading unfolds as a high-octane journey into the heart of financial markets, where quick decisions and nimble execution can lead to rapid profits. Traders engaging in intraday strategies find themselves navigating a labyrinth of technical analysis, leverage, and market dynamics, all while adeptly managing inherent risks. Each intraday strategy demands not only a unique skill set and a deep understanding of the chosen approach, but also an unwavering commitment to disciplined execution. As with any trading activity, success in intraday trading is an evolving process that hinges on a combination of knowledge, discipline, and adaptability. Traders must continuously refine their strategies, stay informed about market developments, and cultivate the mental resilience needed to navigate the challenges of the high-speed terrain of day trading. In the pursuit of quick profits, intraday traders embody the essence of agility, decisiveness, and strategic acumen, making split-second decisions that can define success in the dynamic world of intraday trading. The journey into the intricacies of intraday trading is an ongoing exploration where each trade is a lesson and each day presents an opportunity for refinement and growth in the ever-evolving landscape of financial markets. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.